guys. This is Sri. Welcome to my podcast. So, we run a disciplined real estate investment operations focused on underwriting, acquisitions, and management play assets. So, our firm's approach is simple. We look for stable, cash flowing opportunities where operational improvements can create durable value. So, a big part of that work is helping investors understand how to participate in these deals intelligently. So, especially through retirement capital. So, many investors are surprised by how much idle capital sits in their retirement accounts that could be actively deployed into real assets. So, once you understand what an SDIRA is and how rollover work, the conversation shifts from can I invest to how do I invest intelligently. So that's where commercial real estate becomes compelling, or any alternative investments for that matter. So it's not about chasing yield, it's about disciplined risk management. So commercial real estate offers tangible, collateral, predictable income and a level of control that public markets rarely provide. So, for investors looking beyond stocks, this is a way to align long term wealth with stability and purpose. So, to set the foundation, I want to bring in our guest Andrea, SDIRA custodian from Inspira Financial. So, she's going to break down the SDIRA mechanics, what they are, how they work, and the key rules every investor should understand before deploying retirement capital. So, welcome, Andrea. Go ahead.
Namaste. Thank you so much for having me. I'm just going to go ahead and share my screen here. Let me know if you listen. Awesome. So, thank you again, Steve, for having me. My name is Andrea Chachin, and I'm a CISP. I work at Inspira Financial, and I'm an IRA specialist. So,
You're welcome.
let's go ahead and jump right in. And before we start, though, we always start with a disclaimer. So, everything shared here today is for educational purposes only, and all information, all parties are encouraged to consult with their attorneys, accountants, and legal advisors before entering into any type of investment. Okay? So let's start with a very basic, what is a self-directed IRA? I'm not sure if you guys have heard this term out there. You know, it's used differently for different purposes by different custodians or parties. So, but really what I want to, explain today is the fact that a self-directed IRA isn't any type of IRA per se. Really, self-directed just describes how investments are managed within an IRA. But really, an IRA is always going to be an IRA, even if it's self-directed, it's still going to be has the same rules, the same restrictions, the same contribution limits across. What a self-directed IRA investment with a self-directed IRA, investments are managed directly by the account holder. And so this offers investors unmatched control over their investment choices. It can lead to more engaged investment decisions. So what makes self-directed IRA distinct from a regular or more traditional type of IRA is the type of investment. This account, the self-directed IRA being, you can have and hold alternative assets. Alternative assets are also called private investments. They have different terms, but we call them alternative assets. In short, basically, you're in control of the IRA. So some of the benefits that we can touch on today, the very first one is tax benefits. So IRAs are actually either tax deferred or tax-free accounts, meaning that the investment gains allow for compound growth without the tax liabilities that you would typically encounter when you're investing outside of an industry. So that's very powerful, and that's one of the major benefits of investing through the IRA. And one of the main reasons why people should use these type of accounts to invest. The second one is portfolio diversification. Many alternative assets operate under different economic drivers that traditional assets do. So this can provide a buffer against market volatility if you want to have your eggs in actually different baskets, right? I know that a lot of the more traditional custodians allow you to do only or put your investments only in private or in the public market. And they do offer different option, you're not truly diversified until you actually tap into the other side of the market, which is the private side. Also, financial autonomy. Self-directed IRAs enable investors to invest in assets that align with the interest and strategy. Moreover, you can actually choose an investment that is either close to you, meaning that you see, you understand, you know, and you have met, the actual investment sponsor for the project, or maybe it's a company, a startup company, or maybe it's, someone that you trust and understand, like for example. So let's go into the different type of IRA accounts. The most typical and traditional, but the most common one is the traditional IRA. This is because most people start with this one whenever they leave a job and they have an old 401k laying around, and they want to use this, the 401k money, and they can actually do a rollover into the traditional IRA. We'll go into rollovers in a little bit, but so that's your typical most common account, and this account is actually tax deferred, meaning that you won't pay taxes until you actually take distributions at the time. Then you have the super powerful Roth IRA. Roth IRA is actually a tax-free account, meaning that the funds that go in there already have to be taxed, and then you can invest those and grow that account, as much as you can and want to, and then every time you can distribute tax-free. It's a very powerful account. Then you have the SEP and the SIMPLE IRA. These IRAs have more. They're actually employer accounts. So if you need more information on these, feel free to reach out to me, and we can go over these ones in detail and see which one's the best for you. Those are the type of accounts that we can handle and hold. Now on to what type of assets or investment types you see more often. And of course, you have on the right-hand side your traditional assets, stocks, bonds, mutual funds, ETFs. By the way, you can do all of these in our account with Inspira. You just also have the benefit of investing in the other side of the market on the left side, which is alternative assets. So private equity or debt marketplace loans, real estate, commercial real estate, like the project industry is funding, for example, commodities, futures, hedge funds, and the list goes on and on. Really, most things you can invest outside of an IRA, you can actually invest inside of an IRA. There's a little more in depth of more into real estate, because real estate is a really kind of hot type of investment and common one that people are doing a lot. These are some of the examples that you see people invest in their IRAs: multifamily syndications, retail land, etc. And then for due diligence, which is something we might go into more detail with Sri in the future. But what I just want to say is that our role as custodians is to make sure that the investment and the documents are correct. It is the responsibility of the account holder, the investor, to find that investment that they feel comfortable doing and that they want to move forward with. And so let's touch on some of the restrictions, or actually all of the restrictions. There's not very many. So it's good to go over them, so we get that out of the way. Again, if you have any questions on these, please feel free to ask me. And this, by the way, applies to all IRAs, even the ones that you invest in the public market sector. They still hold for these accounts. You just don't see them up close until you're doing private investments or alternative investments. And so the restrictions really start with people restrictions. So the individuals that cannot enter into a transaction with the IRA, these are referred to as disqualified persons or parties, and include but are not limited to yourself as the IRA owner, that your spouse, and any male A tenants and B tenants, so your parents, grandparents, children, grandchildren, and their spouse. So those are the people who cannot go into business with the IRA. And then some of the transaction restrictions is selling, exchanging, leasing property, lending money, or extending credit, furnishing goods, services, or facilities. So basically, doing any type of business is prohibited. And those are called, if you get into one of those, they're prohibited transactions. You could put your whole account at jeopardy. So you want to stay away from those. We say to keep your investments at arm's length. And then there's a couple of investment restrictions. IRA funds are not permitted to be invested in just two things, which is life insurance and collectibles. So everything else other than that is fair game. And so really to bring it all together and to move forward with this, what you want to do is just 5 simple steps. One is you're going to identify what type of investments you're investing in. So whether you're doing private, public, or you're doing a combination. And then you want to identify a qualified self-directed IRA custodian, such as an Inspira, that is able to custody those investments that you want to do. And then you want to, of course, set up the account, and we want to fund it. And we'll go into the funding part on the next slide. But and then the last step is, of course, deploying those funds and investing them, putting them into an investment. So there's a few different ways you can fund your IRA. These are the most common ones that we see. And the first one is, of course, doing a transfer. So this is a movement of funds from an existing IRA into your new IRA, and it's called just an IRA to IRA transfer. You can do as many of these as you want and need, back and forth. They are always initiated at the receiving end. It's just a transfer form basically, and that will trigger this movement. So this is again between the same type of account in between the service. Then you have the rollovers, which I mentioned previously. When you move over from either a 401k or 403b or any really qualified retirement account that you can think of. These include a lot, like CRE. There's a lot of different ones. So if you always want to check to see if you have any other, like, these type of retirement accounts under your name that you can utilize. And then, of course, you have your contribution. You can always contribute for out of pocket outside of an existing retirement account. And these are, of course, subject to an annual contribution limit. So if you can Google them real quick, contribution limits of an account. You have until tax filing deadline the following year to make the contribution for the current year. So that's really important to know too. And then, a little bit more about Inspira if you guys are interested. We're a holistic financial wellness company. We provide health, wealth, retirement, and benefit solutions that strengthen and simplify the financial journey. And we have about 8.2 million individual and institutional clients, about 60.2 billion of assets, both between traditional and alternative under custody, and about 23 plus years of in the business, in the self-directed IRA business, and health and wealth solutions. And then we have about 41,000 different unique alternative assets in this right now, and we're always expanding this number. So here is my contact information, my phone number, direct line, as well as my email address. If you have any data, if you ever have any questions, please feel free to reach out to me. So thank you very much.
Thanks, Andrea. That was good. I just love the benefits, especially the tax savings. That's how you build real wealth down the line. Not to mention about financial autonomy. So being in the absolute control of your own investment decisions is really good. So option. But I want everybody to know about the restrictions. Please work with your IRA professional or your SDIRA custodian. So we wouldn't want IRS to impose fine on you. So that breakdown is exactly what most investors never hear, and this is where our world connects directly with what she just explained. So once an investor understands SDIRA mechanics, so the next step is what kind of real estate actually deserves the retirement dollars. So not every deal and every operator qualifies. So not every asset class behaves the same inside a retirement strategy. So in our operation, we just focus on management play assets, properties where disciplined underwriting, operational improvement, and tight expense control create durable value. So that matters for all the SDIRA investors, because retirement capital should sit in assets with stable cash flow, with clear governance and a predictable risk profile. So you're not chasing a moonshot, but you are building a long-term tax advantage wealth in a controlled environment. So that's what I like about it. So when someone asks, what should I invest my SDIRA into? The real answer is into deals where the operator has a repeatable system, transparent processes, and a track record of protecting downside. So that's a filter we use every day. So so that's it. We have covered the why and how behind using a retirement capital in alternative uh, uh, investment vehicles, including the real estate. So the goal here is not complexity, but it's clarity. So when the investors understand the rules, the process, and the right type of assets, they make the better decisions and avoid the common pitfalls that slow people down. So with that foundation in place, we would be discussing in the upcoming sessions more about STIRA investing, including but not limited to the common delays that investors would face during STIRA transfers, and many other topics. So, Andrea, do you want to add anything on what we would be discussing in the?
I think you've covered most of it. I think you covered most of it. I had something, but it just left me. I had something I wanted to add, but if it comes back to me, I'll add it. Yeah.
Yeah, so we would be giving the checklist that everybody should follow. So whenever they want to initiate their STIRA transfer, uh, and then most importantly, delays. So in our next webinar on Thursday, right? On this coming Thursday at 1 p.m. Eastern time, we would be discussing about the delays that would normally slow down the process, because time is of essence. So because there is a timeline that we need to close the deal, so we need to absolutely make sure that everything that we do is correct, document wise, and
Yeah. So what we'll be doing next, or what I'll be doing is doing more of a deep dive also on the actual process, like you said, because that's when you see delays happen, so you want to avoid those. So we'll be covering more like the actual process and deep diving into each step of the process.
All right. Yeah, that's about it. Thanks, Andrea. Thanks for taking time and letting our audience know the importance of SDIRA. So hopefully, in the coming sessions, we can just provide more value.
So thank you for having me.
Thank you so much. All right. Bye.